All right, so welcome to this continuation series. All right, so in the previous class, we talked about buy-side liquidity, talk about different kinds of buy-side liquidity, and there's something I should have mentioned which I did not, which I will just be talking about briefly. All right, I talked about the Asian highs. Please watch the previous video, that's day 4 if you haven't watched it. All right, so the day 5 if you have not watched it. All right, so let's talk about it. So one last one, old highs. You see on buy side liquidity. So old highs also act as buy side liquidity, right? So an old high is actually a buy side liquidity. That means whenever you see an old high in the market, like this is an old high, this is buy side liquidity because some people will see that as what a kind of resistance level, all right? So old highs always act as, look at this point, you can see market always run for old highs. So market always run for old highs. So the recent highs, old highs are also buy side liquidity, right? They're all over the charts, right? The areas in which people want to sell from. And let's see, these are old high. See old high, they're all over the charts. Another one here, old highs are all areas of buy side liquidity. All right, all old highs are buy side liquidity. All right, the areas in which traders want to get involved in the market to, seize old high here. So they want the very old highs, right? So the old or recent highs. So we can also put that with old and the recent highs. There are also areas of buy side liquidity. So old and the recent highs, right? So that's just quickly to let you guys know that this whole area of liquidity. So we can also put old and or let's say old highs, maybe old highs of the previous day, previous month, previous week, previous year. So can be an area of liquidity like a monthly old high has been there for like 5 months and price has not breached it. So I can also use recent highs, right? So these are the most recent highs in the chart. They also buy side liquidity. So old highs are highs that have been there for a while. Maybe the high of February, the high of 2023, the high of 2022, or all those high were from the previous years, previous weeks, previous days, all right, or early in the morning, maybe you are in the New York session. So the high from Asia can also act as an old high, right? Old high can also be in form of Asian high, can be in form of previous session high, can be in form of anything. Just now, anywhere you see an old high is a liquidity for buy side, and the recent high is also a liquidity for what buy side, right? So let's understand those two things. Now let us go properly into today's topic, which is what the opposite, which is what sell side liquidity. Right, so sell side liquidity. And in the previous class, please watch the previous class if you haven't. Please watch it. Right, so um for this one, like what is it? All right. So you can also refer this as what buyer stop loss, right? That's how I should see it, where buyers put in their stop loss, where they get involved, right? Because a trade entry is not far from the stop loss, right? So central liquidity refers to was buyer stop loss. So we're referring to where people want to buy the market. Where would they like to buy? Where would they like to put their buy stop loss? Where would they like to put their buy break? If you're buying the market now, where would you like to buy? Where would you like to put your stop loss? All right, these are all areas of what liquidity. All right. So tomorrow we're talking about smart money traps, which you need to also know. This is also an area of liquidity as well. So we'll talk about smart money traps tomorrow. This is also a type of liquidity. All right, it's called smart money traps. All right, SMT. So let us now for buy side liquidity or sell side liquidity, we have various types. I will just kind of list out. So I want to for Asian lows. Please, this is a free boot camp. The best thing you can do for us is to share um this call with your friends, share it with your friends, just share the device or we're not asking you to pay for it. This class is also be a paid class because it's very, very deep. Right? 30 days of my time, 30 days of my resources. You have it's just love, right? So the best thing you can do to reciprocate that love is to share the link with your friends. That's what I'm asking. I'm not asking you to send me money. I'm not asking you to subscribe for anything. I'm not asking you to buy any course. Just simply share the link with your friends so they can also learn. That is all I'm asking. Right? It doesn't cost you anything to share the link and like the video. It does help to encourage the channel. That is all. That is all we're asking. Nothing, we don't ask you to pay for anything. We're not asking you to subscribe. We're not asking you to do anything that will cost you. Just copy the link and share. That is all. All right. So we have Asia's lows, previous weekly lows, previous monthly lows, previous we have previous session lows. We have what old lows. We have equal lows or flat bottoms. Right? No, we'll talk about flat tops in the previous class. right? So old lows and how was recent lows, right? I think these are all of them I can remember for now. Previous weekly low, previous session low, blah blah blah. All right. So you already know the drill, right? I've just what I talked about yesterday is just what we're talking about today as well, right? So Asian lows, previous weekly low, previous monthly low, previous daily low, previous session low, old lows, equal lows of flat bottoms, recent lows. Yeah. And so the trend line drops, right? Peak and drop. We always get that spelling and that stuff, right? It doesn't mean it. Right. So let me just be very okay with that with this. I'll just get what if you have a peak, you put it called words. Okay. When I get that, I will type it in. Right. So trend line bottom. Right, that's the bottom part of the trend line. All right. I think straw. Sure. I think straw is the bottom. All right. So it's the lowest point. So it's a draw. So all right. So let's start with it. So we have to talk about. We have already explained this thing before with the buy side. So we won't really be talking too much. All right. So I said that this Asian one is time based. All right. This is time based, and the session one is time based too. All right. So these are the two time based oasis or time based type of liquidity here. The Asian news and the previous session is a time based. While other ones are just chat based. Like that's them on the chart. We have to complete time into it. All right. So let me just copy this as well so I can have it so in case it disappears. All right, so now let us quickly look at these things. Let's start with equal lows and flat bottoms. Right, these are kind of social liquidity. So let us go to the charts now and look for equal lows and flat bottoms. All right, so that's it. So you can see a flat bottom here. You can see this one is flat, or the lows are relatively equal, right? It does not have to be perfectly equal. You can also call it relatively equal. You can see this was flat. What happened? Can you see what happened? Can you see? Can you see this big move? What did he do? He swept that what? Low, right? He swept this low, everything there. So what we call a sell side liquidity. It's an area of target for smart money to take out buyers, right? So they usually want to offset buyers by doing what? Trading below their stop loss and then doing what? So if you are buying this, your stop loss as the market move, imagine maybe you bought here. So imagine you bought here, you bought somewhere around there, right? You bought somewhere around there, your stop loss will obviously be below this level, right? It will obviously be below that level by a little fraction, right? So that's basically what to talk about. So as the market is moving, you might be tempted to do what? To move your stop loss up. When the market was buying, can move your stop loss up as it's showing around it, this new low. So because the market was dropped below that your entry. If you had your stop loss still below here, then you would have taken a loss. If you move break even, you are taking what a loss, right? So that's it. So these are areas in which markets tend to upset buyers. I can see another one here, the flat bottom here as well. How did you guys apply it? Alright, look at this as well. Look at this. I see this flat bottom here. What happened? Price was running through, right? So market always runs out flat bottoms, especially when it wants to go the reverse direction. Right? If the market wants to buy, it tends to do take out equal lows before buying. Right. So the market wants to buy, it can say it took out the lows first. So this is a manipulated move by smart money to do what to go higher. Now see how these things occur. Right. These are all liquidity traps, like traps for liquidity. All right. So that's how I look at it. Man. The market does not respect that. Right. So now let's look at another one, which is called what? Um the trend line draws. Right, so you can see, let's look at trend line quickly. As this, you see, you draw a trend line from here, you can see there was only a trend line here. What happened? The market kind of reacted a bit. You can see the market reacted, what happened? The market ran it through. So these are areas of liquidity, especially when the market is against the trend. Right? When the trend line is against the trend, you can see the market to do this. Right? You can see the market was bearish from here. The market broke structure somewhere around. You can see that was very clear break of structure here. Right? So this trend line was not needed. Those this market was bearish from this point, and they can see that this was one liquidity building up. The market finally came back to mitigate this other block, this other block, hit this other block probably, and then would drop. All right, so that is it. So trend line floors are areas in which you should anticipate this. You can have trend line here. Top of the market was ran it through, right? So the areas of what? Liquidity. The areas of liquidity that the market always wants to run before going higher. So you can see how these things occur, right? You can see how these things occur. Right? You can see how these things pan out. These are just areas of liquidity. Right? I want to just take a snapshot of this. Let's take a snapshot of this so that I can post it. All right, so that is it. So we have these areas of liquidity that are always occurring, always occurring, right? So let's take that out. So we're posting that. Let's talk about another kind of liquidity, which we also mentioned. We mentioned another one that is called what? Day what? Right. So what kind of liquidity is called what? That is called the old lows, right? So you can see old lows here. Every old lows is liquidity. So old low can be in form of equal, can be in form of flat bottom. So sometimes they combine and look the same, all right? So you can see this is an old low. All right, so you can see this old low here. This look at all these are old lows here have liquidity. You can see another old low here. This look very old lows. Those are formed long ago, right? So you can see this old low here. This low formed on Sunday. And market came on Monday and took it out, right? So that is also the same. So previous daily low also the same thing as well. On previous daily low, you can really see on the daily chart. You can see very clearly on the daily chart. So the market take out previous daily, very clear. So you can see how the market was bearish. It was taking what the low of the previous day, previous low taken, previous day low taken, previous low taken. You can see the market always does what gravitates towards on the previous daily low, right? And the market is bullish, it takes that previous daily low before running higher. Why if it's bearish? Notice this. A previous daily low is the target when the market is bearish. But if the market wants to reverse or buy, it takes it out before buying. So the market is bullish. It will likely take out previous daily low first before buying, especially when the candle opens very close to the previous daily low. Notice that when the candle open close very close to the previous daily low, it might take it out before buying, right? So even if you want to sell this, when market take out the previous daily low, anticipate what reversals. So the previous daily low is an area for what your entries or confirmations when you want to buy. And when you're bearish, the previous daily is your target. So if you're selling that, just sell the previous daily and exit your trade. So if you're selling this market, your previous daily can be your overall target for the day. So if you're in trade trader, just target on the previous daily low, and that is it. You're done for the day. All right. So you can see this one. This is recent low. You can see this recent low here. Market was ran through the recent low. So another one, market was ran through the recent low. So can I use a recent low? If you're swinging, you can use a recent low. Now, if you are selling this market and you're swinging, you can use a recent low. But if you're not a swing trader, you cannot simply use what the previous daily that was target. So it's up to you. It depends on the kind of trader you are. If you swing, then your target should be what the most recent low. While if you are intraday trader, your target should be what the previous daily low. That is, that's what it is like that. So if you're intraday trading, just target what the previous daily low. If you're swinging, target the most recent low. And if you are, let's say, scalping, target the previous session low. So if you're just coming holding short trades, I just target the previous session low, right? So look at EU now. EU, look at what EU is doing. EU is opening very close to what the previous daily high. So it's very likely that price might do what rush to the previous daily high before selling. So if the market wants to sell now, it's very likely that the market might take out what this previous daily high. It's very likely market take out previous daily high. So for me on EU today, I'm looking at market taking out on this high before they want dropping. Market should likely take out this high before dropping. You can see that the time is still printing. I said this is live now. The candle is still printing. So it's not like I'm giving hindsight. I believe that this market should take out on the previous daily high before dropping. If it wants to sell, and even if it's buying, to take out on the previous daily high because the market is kind of giving us a bullish move. All right. So even the market wants to sell, you should take out on this previous daily high before it will drop because why? The market opened very close to what the previous daily high. So always look at where the market opened. It opened very close to the previous daily high, and the market to run it out before they were dropping. All right. So look at this happen. The market took out was this previous daily high. What happened? It started dropping very easily. And where was the target? Targeting what? The recent low. So you have to understand that recent low, previously high are very beautiful if you understand what you're doing. So let's look at what session liquidity. So for session liquidity is very easy. You know, let us look at it from the sell perspective. So now remember what we talk about now. This was on 5th. All right, so let's look at this. So the London session opened there. Let us look at the London session. Okay, let us start from London. So London opened somewhere around there, right? London opened there, right? London opened there and extended to what? Okay. So this is London session now, this area. So can I simply put a vertical line there to properly delineate it? So have this. All right. So London opened there. What happened? As London opened there, what happened? So as New York opened there, this is London session now, this area. And this is the low of London, and that is the high of London. So what happened? At London opened, what happened? As the New York opened, what happened? The London liquidity now becomes a target. So you can say as London opened, as New York opened, sorry, market was the run what London liquidity. Can you see it? Immediately we had the New York session. What happened? The market ran through London because why? This low was from the in the London session. That's why this is called a previous session liquidity, a previous session Sellside liquidity. So an area in which a low that formed in the previous session is typically what we call what a previous session liquidity. Markets ran it through and then what bought, right? So this thing happens on repeat. I can see as London opened, what they do is ran out what the liquidity that formed what in Asia. So you can say this Asian liquidity or the previous liquidity was run through by what London. London opened there. What happened? This load was so let's look very carefully. London opened in this candle, right? And we had this Asian low here. So this low is an Asian low. It was formed in the Asian session. So we had an Asia or let's say pre-London low, right? Asia or pre-London low. The market opened up, the market ran through what this previous session low, which was formed in what the Asian session or the pre-London session, right? So whenever we enter a new session, just simply put a vertical line. Once we enter a new session, just put a new vertical line there, and then all the lows or highs that were formed before that line becomes what liquidity. So if you're bearish, target it for take profits. If you're bullish, exit market will run it through for before you do what you buy. So if you want to buy this, once the market runs through this, then I can look for what buy it afterwards it break. So the market run through this and then broke to the upside. The market ran that liquidity and broke bullish. This time because was my area was bullish area. So can I look for what buys in this market and take price higher? Why? Because we have taken was London liquidity. So market always runs through previous session liquidity and it's very, very beautiful if you can understand this, right? So I don't need to talk too much. The best thing you can do now is a back test. Very, very easy topic, all right? You have to understand how London session prints, how this. So just do how to go through your chart and identify these things on your own, right? It's the same thing for previous week. The same thing as well. This is a previous weekly. So I said the market wants to buy, it took out the previous weekly low and then do what it bought, right? So if the market is bearish, it targets what? The previous weekly low or the recent low. Because the market is bearish now, what does it do? It targets what previous weekly low, right? Or most recent low. So look at this recent low here. What the market do? Has run this recent low or old low. This low formed in April 2021, right? And the market ran it through in what? In August 2021. So I said the weekly chart prints. You had this recent low here formed in August 2021. And market ran it through in what? In September. So you can see how this is high it prints. Market always run. Oh, look at this old low here. This old, look at this old low here that formed in March 2020. What happened? Market ran it through what? In April 2022. That was 2 years later. Market ran that old low out, right? So if you're a swing trader, you can use the old low for your targets. If you are in intraday trader, you can use what the previous weekly low as your target, right? You must not catch the old low if you are intraday. If maybe you don't swing, maybe you're a position trader, you can also use this as a target. Maybe if you like the hold position trade, you can also use it as a target. But if maybe you just like maybe 2, 3, 4 weeks, you just want to swing for a while. So I don't really do this because I'm not a swing trader. So because a weekly candle takes a whole week to print, just one candle here takes one full week. So I don't have the patience to hold a trade for 1, 2, 3, 4, 5, 6, 7, 8, 9. Wow, almost from here, from this high level, 2021 down to this low. It took almost 2 years and 5 months for the market to come from here to this point. So it's really a lot of time. So I cannot really fathom that kind of trade. We don't want it for how many months, right? So you can see EU now. EU has taken what the previous weekly low, right? This might mean what bullishness. So I've told you that when market take a previous weekly low, you can anticipate what bullishness. So EU might buy a bit after this has been taken, right? So instead of looking at this liquidity, the previous weekly low. So that's why market is pushing up. When the market take out the previous weekly low, right, or the previous low, expect some kind of retracement. That's usually what retraces. Market is retracing now because today is a good day to retrace because we have taken out what this low, right? So that is very, very beautiful. If you can understand this, then you really go far in your trade, right? So if you want, don't forget to plug in for tomorrow's call. Tomorrow's call talking about what smart money traps, right? It's still on liquidity. So do well to like this video, share with your friends, and I hope to see you guys in tomorrow's class.